Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. The price is falling so fast that I had to do another quick update from the update I gave you a couple of days ago. I think most people are preferring this shorter video format. Hopefully I can do these regularly throughout the week. So please remember there won't be a video tomorrow as per normal on Sundays. Okay, so let's get straight into it. But before I do, just a normal disclaimer. Please remember every one of my videos is for educational purposes only. Nothing in the video should be taken as financial advice. All I'm doing is giving you my perspective, my insight into charts. I don't have a crystal ball. I don't provide financial advice. So I always encourage everybody to do their wider research before making any investment decisions. So with that out of the way, what I've got on the charts here is basically the daily chart. And what we've got here is these two channels which I drew for you in the last video. So basically we've gone up to the $69,000 mark here and we've been going into this channel ever since, except just last night we broke below this channel here and currently we're at $34,000. So in my last video I mentioned that we must hold this level here at 42,300, simply because if you look at this flash crash, that was the $42,300 mark there. And as you can see, the price action has been chopping and changing around these levels in the past many times here. So obviously this was a very critical level. But however, we broke down precisely 3 days ago on the 19th of January. And since then, what we've got is a cascade waterfall since then. And if you're trying to catch this, what people call catching a falling knife, then this is the quickest way to get wrecked in this market. Usually we find that in classical charting, we don't usually get to a bottom until we have some sort of a capitulation. And look at this. We're having a capitulation here, as you can see, with the normal volumes down here. So we're now getting some sort of a capitulation, which means that the end is coming near for this big fall. We may yet have a flash crash like this down here to take us to the 30,000 and have a big bounce up just like this long wick here. So please be aware of that. It is highly probable that this could easily happen. So if we have a look closely at these levels here, as I mentioned in the past, I drew this range here which was at 45,500, and I said that once we get above the 42,300, the thing that would convince me that we're back on the bull market would be an open and close above here, at least on the 4-hour chart, to take us higher. Obviously this narrative hasn't played out, which is fine, because as emotionally intelligent investors, we have to do what the market tells us. So we have to respond from a neutral position, not to enter our bias into the market of what we would like to happen. So basically what's happened is we've lost the $42,300 support level here, and we very quickly came down to the line in the sand that I've been talking about for many weeks in many of my videos, that if we broke the 40,000, then we're going to see a very quick rundown down to these levels here at 30,000. That is precisely what we're having with this cascade effect here, a waterfall all the way down. And we really don't have much support levels around these levels. And I mentioned in one of my tweets in the last day or so that the dreaded 40K has broken this morning. And I've said that the next strong support level is going to be at 30K. However, there were two other support levels which we did actually come back to and started having support. But well, like I said here, weak support at 37,600 and 36. But we've now broken those. So if you want to know my perspective on a regular basis, please go to my Twitter account, which is in the description box below, and just follow me there, and then you'll get a lot more quicker updates. So what we've got is we've just had that happening here, where we've broken the 40,000. The bias is strongly to the downside. Why would you want to catch a falling knife with that? Because if you try to catch the falling knife here, you might have got a relief rally, but this is what would have happened. And if you tried to catch a falling knife here, you might have got a relief rally here, but then if you tried to catch one here, you got another relief rally here, and now there is no sign of any reversal at these points. There is no candle pattern that's telling you that this is the bottom. So it would be absolutely a crazy idea to start buying at these levels here. We may get a relief rally which will suck a lot more people up, just like here, here, and here. But there's no telling that at this point we're going to do this like we've done before over here. So to me, the next level, the next logical level is at these points here. And I think the most sensible thing to do would be to dollar cost average around these levels, starting from around about the $32,000, $33,000 mark down to the 30,000. And if it should go down to the 28,800 level, then obviously that would be another point to buy up. And that's simply because the chart's telling you those levels are the ones to aim for. So look at this, at 30,000, there is an immense amount of strength here. So with a high degree of probability, remember, cryptos are all about possibilities and probabilities, nothing to do with certainties and guarantees. No one can do that. And I certainly don't have a crystal ball. So this is where the price is heading, with a high degree of probability. So if you're trading and you're looking for trades, well, this is a great point to trade back up. And obviously, it's going to have a bounce at this point. And the question is, where would it bounce back up to? If you do the Fibonacci retracement from the previous high here, down to these levels at 30,000, we could quite easily get a relief rally up to these levels here at 38.39. So we could get up here and then come back down on the second leg to create a double bottom before we start moving higher. Or if you're a long-term investor, then this would be a great point to dollar cost average in to hold for the continuation of the market. The other trading levels to look out for, so once we've got to the $30,000 mark here, this 40,000, as I mentioned many times, is obviously going to be a level of very strong resistance, because obviously strong support turns into strong resistance on the way up. So you're going to have one magnificent opportunity to short the market here if that's what you want to do, and to try and catch it back down here at possibly the 61.8, or if you want to be safe, to catch it at the 38.2 level. But we'll go into detail once we do get to these points. But I'm just trying to plant the idea in your head that if you want to do swing trading, this would be a great point to buy, and certainly this 40,000 would present an amazing opportunity to actually take profits. And after that, then we're going to have another resistance, obviously, from these strong support levels of the past, which will turn into a resistant point here. So it may well be we go up and down at these levels between 40 and 42.3 before we break this 42,300 mark. So as I said, the bias is to the downside. This is really where a lot of the money is lost. So I hope none of my subscribers are losing any money here on the way down by buying at silly levels like this. Yes, it can turn around, but there are no signs. So a logical investor would basically wait, even if you have to buy it over here. If there is a pattern developing here which tells us that a reversal is taking place, then this would be a better place to buy than buying willy-nilly here with the hope and the wish and a prayer that it will go up, because the bias is down. So the probability is that you're going to have to ride it down to these levels. Having looked at a lot of the comments in a lot of other people's videos, one of the things I've seen very worryingly is that people are trying to convince themselves against all the evidence in the charts by saying, surely it can't go lower than this. Surely the market has to reverse from here, and saying that the current levels are presenting a fantastic opportunity and value to buy. But where is the evidence that we're turning around here? Sensible people would wait for a sign and then to have confluence which backs up those signs as confirmation that we are slowly turning around and then going to the up and breaking some key levels like this here. So if you start turning around here and then flip above this, then that could be a good sign that we are moving up. So 37.5 around these levels would be a good sign. So please be aware of your emotional biases. Be careful in this market. Currently, as I showed you with the volume, the capitulation is taking place. We can expect a flash crash down to these levels of around 30,000, which will get bought up very quickly, just like here with this candle. And as I said, 30,000 is really the sensible level. It's a key level where you would be expecting to buy and expecting a bounce from. And we have to mention that should we break this level here, the 28,800, then this would be another key level like the 40,000, where I would have to then go back to being underweight again around here. So you've got to be careful that while this is a very strong level to dollar cost average in, like this here and previously, There is no guarantee that it will bounce. All we can do is use our knowledge of the charts, knowledge of the historical price actions and how Bitcoin behaves to say with a high degree of probability that it will more than likely bounce from these levels. But then as intelligent investors, we should always be aware on the downside that should this not play out to that narrative, then obviously we would have to take a different decision here. It's no point riding it all the way down to the 20,000 mark. So we would have a decision to make. Am I expecting that? No, I'm not. If we have a look at the Fibonacci retracement from the previous all-time high of 20,000 to the low of that bear market, something very interesting. So this is the 20,000 back in December 2017. Down to the low here. And if we extend that to the current price action, you can see that the 1.618, the 61.8 Fibonacci retracement, look exactly where it is. Right on at 30,300. So we can expect with a good degree of probability that this is a bounce coming up because there's a lot of confluence around these levels. Because not only do we get support at these levels multiple times, but the Fibonacci retracement, which Bitcoin has a very high affinity to the 61.8, is also lining up perfectly at that level here. So food for thought for you. Okay, so that's the quick update. I hope you enjoyed that. Please remember there won't be a video tomorrow on Sunday. I'll try and do another video early part of next week. And if you found value in the video, then please do remember to like and to subscribe and to turn on the notification bells, because I don't know which days I'm going to do the videos. So you're better off turning on the notification bell so that immediately after I've posted a video, you're going to get that notification straight away. So that way you'll get the most up-to-date information and my perspective on the charts. So please do like and subscribe. And if you've got any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.